Welcome to Traders of Money, the podcast where the secrets to trading success are unraveled one expert at a time. I'm Jordan Meller, your fascinating host to walk you through this world of trading. Each episode, we are going to dive in deep with a seasoned trader to understand their unique strategies, unforgettable trades, and the hard-earned wisdom that they've earned while along their trading journey. Today, I want to introduce you to a remarkable figure in the world of trading. Aaron Collier is renowned for his attention to detail and surviving a horrific $12,000 drawdown in his early days. With 7 years of trading experience, he has experienced the highs and lows of the market, making him a treasure of knowledge and insight. So let's dive in and learn from the best. Welcome to Traders of Money, Aaron. We're excited to have you here.
Excited to be here, my friend. And what an introduction. I can't tell you how much I appreciate it. Trading is hard. Trading is hard, but we love it. We're passionate. We show up every day, and hopefully we won't lose all of our accounts. That's what we're after.
I love it. I love it. Look, to start us off, something lighthearted. Can you share an unexpected fact about yourself that most people in the trading world don't know?
Sure. So the first thing that came to mind was I was an avid martial artist. I still am, still do a lot of rolling around, a lot of jiu-jitsu, all that fun stuff. I actually started out a big karateka. I did a lot of karate tournaments and that kind of thing in my younger days. And my sensei would tell me I didn't have any hips. I needed to go dance. I took a dance class, a ballet class. Met my best friend on the planet, was the best man at his wedding. And that eventually led to me being a part of a breakdancing group where I met my wife. So ballet turned into breakdancing, turned into marriage. It's crazy how things go.
I love it. I absolutely love it. So has dancing in any way, shape or form, other than being
Always.
a good time and confidence, helped your trading?
Yeah, 100%, 100%. Just because you have to really believe in yourself to get out there and bust a move. Liquid courage does assist, but there's a certain bravery that's necessary, certain courage that's necessary to be up there on stage. And I did a lot of stage dancing with my wife, and I didn't even know this, but I recently have found a story where I had an uncle who was a Michael Jackson impersonator back in my native Orlando. And wow. He did a performance at an amusement park nearby, and I actually danced to his music as a toddler. Didn't know that. Just figured that out a few weeks ago. About to be 28 in a few days here. It's crazy how that goes.
Wow, fantastic. Happy birthday for a few days. I didn't know that.
Cheers.
We'll have to arrange something there. But look, Traders of Money, we dive into in people like yourself who have been experienced. You've seen the ups and downs of these markets. 7 years you've been trading. We try and pick out little treasures which have really helped you become who you are today. And I wanted to first dive in, looking at your trading career. Was there an aha moment throughout your trading career? Was there a couple? Is there anything you can touch on there where you really had kind of that wake-up call?
Yeah, so I mean, losing money helps you to wake up. I do believe that. You mentioned it when you started talking about things. I mentioned it when I filled out the form to do this interview. You know, oftentimes when we are proud of things, we're proud of accomplishments that we've made, right? We're proud of things that we've done that are in the positive. Whereas with trading, as with many areas in life, we almost have to be just happy we're still here. The people that make money in trading aren't those that post $30,000 days or that post 30% days in the markets repeatedly. They're just the people that stay here the longest, because regardless of what you do, regardless of how good you are, there's going to be a period where you lose money, where you have a drawdown, where you have these bad experiences, and that's where you're going to learn most. So when I'm thinking about things that really were aha moments for me, the first thing that comes to mind, and I've told the story a little bit on stream before, but when I first started trading and really making money, I had a great job. I was making 6 figures in sales, straight commission. I was good at that job. I like talking. I don't know if you guys can tell. And so I was able to make a ton of money in that. And I was already trading 3-4 years by this time, right? So I took those funds that I was making and I funneled that into a trading account, and it started doing really, well. There was a period of time, the pandemic happened, so I spent a lot of time at home in between sales calls. And there was a period of time where I would go into the back room at 9:30, come out at 9:45, anywhere between $1,000 to $3,000 richer. And then I would go to my day job where I would potentially leave that day job another $1,000 to $3,000 richer. At 25, with your only responsibilities being a fiance and a dog, there's not much you could have told me, right? I was the second coming of Jesus. I just had to grow the hair out so I could look more like Jordan, and I was there. It was all there. And then all of a sudden, the market changes because the market is constantly changing. I was trading the NASDAQ. My strategy was super simple: support and resistance off the daily. I would trade 15-minute, enter on a tick chart.
Yeah.
My entry was on a tick chart. I would hold that entry from it. I mean, it was thousands of ticks, Jordan. It was like the equivalent of a 2-minute, because it was like 20,000 ticks. So I would end up hopping in 2-to-1, risking 500, making $1,000 at minimum, sometimes more than that, and that would be how I traded. Well, sometimes the market changes. All the time, the market is changing. So I was doing really well from March to about June in the futures market. Things slow down a little bit in June. So did my P&L. That frustrated me. So I overtraded and I gave back tons of profit. I think I dwindled the $20,000 account. I made it go from 20,000, maybe 35. Took a bunch of money out, 20,000 to 12,000, a little bit lower. I don't honestly know where exactly that account entirely ended up, because during that period of time, I neglected my journal because I was so confident I didn't need a journal. So the data that I have from that period is spotty at best. But I do know that having lost all of that money, I realized that I wasn't the second coming. Maybe having a day job wasn't the worst thing in the world for a trader. And I needed to be more flexible when my strategy wasn't working. And it wasn't just my strategy not working, it was me. Determining when you have a strategy problem and when you have a you problem is a totally different conversation. The strategy probably would have worked fine if I wouldn't have allowed myself to be frustrated with the process. Any good trading strategy is going to have periods of drawdown. To this point, I've had maybe 4 weeks, 5 weeks of drawdown continuously before, which is horrible. You show up every day to work expecting to play, expecting to make money, and you actually have to pay to play. Imagine that, showing up to your job, clocking in, and leaving $20, $20 poorer. That's trading. So for me, learning through that experience and focusing not on my P&L at the end of the day, but focusing on my process was a big learning lesson. Since then, I have removed all money from my charts. When I take a trade, I don't see the P&L. I don't see how many ticks or points I'm up. I know in my head, look, you can do the math, but I don't see that on any of my charts anymore. My journal is meticulous. I'm actually in the middle of building my own custom journal through a collection of Excel charts. I won't bore you with the details. But
you won't bore me, but
analytics.
Come on, Aaron. I'm here every day of the week.
It puts my wife to sleep. It puts the dog to sleep. So one day when I finish it, I can't wait to show it to you guys. But that's really a big aha moment for me, and all of them are. All of my periods of drawdown, the inevitable drawdown that happens to us as traders, whether it's a couple days or a couple weeks, those are the biggest moments of aha for me.
Beautiful. Let's talk about some wisdom, all right, that you've learned through this journey and over the past 7 years and through learning that, going from a god to a peasant and then back to that middle ground, maybe back towards a god. Who knows, right? I haven't seen your journal in a little while, but is there a real popular? There's lots of popular trading advice out there. Okay.
Yeah.
People really push forward different beliefs and thoughts within the trading world. Is there any real major trading advice that you hear repetitively that you disagree with?
Absolutely. My biggest things are one, I don't like, and this is a hot take. I don't like paper trading, or you can call it sim trading, whatever you want to call it. I I don't like it because it creates. Um, do you have FIFA? You know FIFA.
Yeah. I was a big FIFA player growing up.
I'm sure you're a big FIFA player growing up. Everyone on the globe is, and I can tell you right now, if you pick a random man from a random
Yeah.
first country, random man, just pick him out of 1 out of 10. He can tell you that he's a top 5 FIFA player on the planet. But then you give him a ball, put him out on a pitch, and he realizes very quickly he's not Ronaldo. That's what happens when you play with Sim. You play with Sim and you're convinced you're a Ronaldo when really you couldn't play on the juniors team. There's a real distinction here between playing for keeps and playing with fake money. I've pushed several accounts 200 or 300% in Sim, and I spent too much time in Sim. And so what that did is that really stunted my growth in trading. It took me a couple of years to recover from my virtual profits, ironically. So when I hear people say, get started in Sim, I totally agree with the fact that if you have a new platform, you should trade in Sim. Super easy to press a button and go from short to long and vice versa. But once you actually have a good feel on the platform, you need to be trading with real money, the smallest unit possible of real money, but you need to have some kind of skin in the game. I don't care if you're risking $3 a trade or one share on an equities platform. I don't care if one pip for you is 13 cents of loss. There has to be some type of skin in the game, because otherwise you're not trading in a speculative manner with real risk management. You're trading thoughts and feelings and stuff that's kind of ethereal. It's not tangible. I always keep physical dollars. I keep physical checks on my desk that say numbers. Like, this check on my desk is for $125. My average trade is $125 to $140 of risk when we're talking about my scalp trades. Of course, there are a few different strategies I do, but I scalp more often. That check, that $125, that is going to pay for a beautiful dinner with my wife and I in a few weeks. February 8th, I'm taking her to this beautiful dinner. It's going to cost me about $180. I already know because I already priced it out. $180 is roughly 1 hour for me. That's real. That's tangible. So when I'm pressing that button on my trading platform, I'm not just pressing a button and playing with fake money. I'm playing for keeps. I think that's incredibly important in terms of trading advice. And that's something that really grinds my gears a little bit. People saying, just trade on Sim for 6 months to get it together, because it's not the same when you're trading in the real markets.
Yeah. Okay. A few things to touch on that. One, you're a futures trader. You've got a check on your desk. Are you sure you're turning 28 and not 58? Because you've got a paper check in front of you there.
I do. I'm an old man at heart. I really am. This is a paper check here. I'll do a tour of the place at some point, but I have a record player actually almost within arm's reach from here. I have a record player almost within arm's reach here. Huge Louis Armstrong fan. Yep. Huge Louis Armstrong fan. When I cook, I haven't been cooking as much lately. I've been working a lot, but when I cook, there's always a bottle of wine. There's some kind of jazz playing, and I get dressed up. I put on a collared shirt to have dinner with my wife at our counter over there. I'm a really old man. It is what it is. I wake up every day at 4 o'clock, and I don't like going to sleep past 9. That's just my life. But I think that it's important. Thank you. I think it's important to keep some of this traditional stuff, because we have a wonderful world where everything is incredibly accessible and very, very, very digital. And that makes it not really feel real to us. I have friends that have lost $30,000, $40,000, $15,000 here or there, that they worked their tails off to get. and they traded that money and lost that money because of frustration. If they had $40,000 sitting on their desk, they wouldn't just keep throwing it into a fire that wasn't producing more money. They'd probably stop after a reasonable amount of risk, maybe 2%, maybe 3%, but they would stop at some point. So I like to keep myself grounded in some respects.
When I like the way that you've made it real, right? It is your R is a dinner date with your wife, which evidently you want to do as well, which as you should. So it's a matter of performance, right? Like if you perform, then you can take her out for a really nice dinner. Do you find that in realizing those profits, or at least in your imagination realizing what that could be, that trading your P&L creeps into your trading? Because now all of a sudden there's kind of an expectation, or you know what it's worth. So rather than trading the charts and what you see, you can trade based on what it's worth. Is there something you've done to mitigate it? Is it not something that's crept into your trading? It just hasn't happened. How do you feel about that in realizing those profits creeping in with that performance anxiety and then potentially trading your P&L?
That's a great question. I think for me, the P&L is much more about risk management than the actual P&L. Because if I know that my risk is that $125 check, I don't want to lose that $125 check. I have to be choosy about this next opportunity. I have to trade my plan, but if I see something that's discounting this trade, I'm that much faster getting out of it. I'm that much faster not getting into it to begin with. So although I 100% agree with what you're saying, the P&L is an area where a lot of traders get caught up. They see dollars and cents and they say, man, maybe I should get out of this trade. I'm up $400, as opposed to allowing that thing to run to take profit at 1,000. I totally understand that. But for me, it's my biggest issues in trading have been related to how I handle risk first and foremost. I've never had an issue with my P&L. Very, very, very lucky there. I'm very comfortable seeing large numbers go back and forth on my trading platform in loss or win, lose, or draw. It doesn't really matter. What matters for me is how I'm handling that risk once I hit that stop loss. This check on the desk is to help me think a second time to say, maybe I shouldn't re-enter this trade that didn't just work out. Maybe I shouldn't enter this trade long when obviously this is a fading opportunity and I'm not very good at fading. So it's just kind of a reminder for risk management as opposed to the actual P&L.
Oh, yeah, makes sense. It makes sense. If there's one thing you wish you had known when you started trading, right? When we could go all the way back to when you were 14 and you bought the stock. I was watching the stream this morning, so I'm up to date with your story,
cheers.
right? But if you could go back to when you started day trading, and there was one thing you wish now you would known back then, what would that be?
I want to give a really sexy answer. There is no sexy answer. I wish I would have known and recognized the power of compounding. For most traders, and these are statistics that aren't great. I was only able to pull this together from a few different prop firms. There was an article published 2 years ago. Glassdoor put some stuff together. Glassdoor is a really great employment company here in the States. The numbers suggested that the average trader makes somewhere just about $87,000 a year, right? The people that really make money in the markets, they buy and hold. And that's just the nature of the beast. Your ability to beat the S&P 500 year after year, time after time, it's really difficult to do. And so I think where I fell short was I was really interested in getting nothing but home runs. Every at-bat needed to turn into a 5R, 6R, 7R experience. And that just doesn't make sense mathematically. If you're shooting for 7R, that means your win rate is something like 10%. And you have to be risking $7 to deal with the drawdown. So I wish I would just be comfortable with the fact that you can compound returns just like you can compound interest if you were invested in the market. If I had started trading at 18, I should have. I was really interested in it. Never went into it. Wanted to swing hammers and build things. Congratulations, but if I had focused on that, it just focused on risking the $18 that was in whatever account. I was really great at saving, so I had money to throw at it. If I was just focused on risking $18 a trade at that time and building that 18 up to 36 over 2 years and building that 36 up to 72 over another 2 years, then all of a sudden, by the time you're 30, you're trading with an account that's actually reasonable, and you making 3 to 4% a month can pay for all of your bills and then some, So I really wish that, and this is advice I try to give to any young trader. I wish that I realized that time is on your side when you're starting off doing this thing. Whether you're 16 or you're 60, you're gonna live until you're 90. If things, statistically, you'll probably live to be here in the States. I think it's 70. It's like 74 here in the States. So if you traded and you really wanted a full career, if you're crazy enough to trade, you're not going to retire. I don't know any traders that truly retire.
Yeah.
That means you can trade continuously for decades and build a beautiful nest egg of wisdom and funds. And I don't think there's anything more fun than wisdom and fun.
Yeah, I'd love to add to that. I know this is your interview, but I just really wanted to add to this.
Sure.
When you first start out trading, see it as a university degree. It's going to take time.
Yeah.
And if you look at when people come out of school, okay, they either go straight into the workforce or they go to university or college or something like that. And if you have a look at the wage, how that works, it can be so hard to see some of your friends or some of your colleagues or whoever they are go on, get 9 to 5s and start making some money straight out of the gates, and it's really pushing while you're sitting here not making any money in the markets. It's really, really tough. And that longevity thing that Aaron's talking about there is so important, because while you may not be making any money now, if you manage to master this skill, you manage to understand these markets, then 5 years time, when they're still on the same salary, you're going to start increasing, right? And the beauty is in this trading, as you mentioned, if you can make 3%, 2% a month, you can go through external prop firms, you can go through compounding and build that account. You can never stop giving yourself a pay rise. You can just keep compounding that account and give yourself a pay rise, give yourself a pay rise, give yourself a pay rise, and you can move on. But a little snippet that I wanted to throw back in there as well. Let's have a little bit more fun there. Let's get a little bit more speculative. Okay, we understand a little bit about your journey. So moving into 2024, it's just begun. We're in January. Okay, moving into 2024, what is your boldest prediction for the trading world this year?
Boldest prediction for the trading world.
Let's get nuts. Let's go bold.
Let's get nuts. The first thing that came to mind was Apple's going to zero. That's definitely not happening. Apple's the wealthiest company in the world. I do believe
they're not looking great. They're not looking great with their phone sale numbers.
Yeah, no, it'll flatten out. I'd say the most aggressive thing right now is just Nvidia. I do believe the pullback on Nvidia is going to be rough. It's going to be a kick between the legs. My issue with Nvidia is they're pumping out these incredible numbers, and their competition is starting to get really, really good at catching up. People are starting to get a little pissed off. Yeah. Jensen is doing a magnificent job, but he can't do it. He can't do it forever. So Jensen is the CEO. He's the CEO of Nvidia. But I do believe that a very aggressive take that I have, Nvidia being a $1 trillion company is something that's going to stay. But that stock price being at where it's at, 560, 570, whatever it's trading at now, I do believe it's going to get kicked in between the legs quite squarely. They've been talking about trying to do a split. And so maybe I'm right by saying, it's not going to be, it's not going to stay at 560. And then they split and it's at 200. It's like, I told you. So I do believe, though, that fundamentally it doesn't make sense for this stock to be this overextended. And I do believe in 2024, we are going to see some aggressive hits to that particular equity. Outside of that, Pardon?
Sorry, you're bearish. You're bearish 22, but I mean, both two of the biggest S&P pushers right now, Nvidia and Apple, you're calling them to both pull back. So are you looking a little bit bearish in 2024?
100%. 100%. And not on everything, right? Like I'm a hot-blooded American. I would love to say that the dollar is gonna keep pumping. I'm a hot-blooded American. I believe gold is the place to be, right? I mean, you know me, you know how much I appreciate gold. But at the end of the day, there's a reckoning. There's a reckoning for these assets. You can't be this extended and not see some kind of pullback. The pullback might not be as big as I'm predicting, but for equities like Nvidia that keeps giving guidance of, I mean, I talked about this last quarter. Their guidance for last quarter was the fact that they were going to make $12 billion, which was 30% more than they had made that quarter. So they were just saying that just sounds like they were pulling numbers out of the hat, and then they did it. How many times can you do that? How many chips are there? I just bought a bag of Lay's chips, and half of that is air. I feel the same way about Nvidia. They're all these chips in a bag, but guys, half of it is air. I'm telling you, when you open the bag and when we see all these financials by the end of the year, just like I'm disappointed when I opened up my bag of chips, investors are going to be disappointed when they open up those financials in Q4. It might take till that long for us to see it, but we'll see it.
Yeah, right. I like it. Right, we're going to jump into a lightning round. All right, so I've got 3 questions, and I want a quick as possible answer, and then we'll dive into them a little bit more afterwards. Okay, you ready?
I'm focused. I'm dialed in. I'm ready.
Every book a trader should read.
Shoe Dog by Phil Knight.
If you could have dinner with any financial mogul, dead or alive, who would it be?
The trader that broke the London Bank.
What's the biggest myth about trading that you'd like to debunk?
We all drive very fast, beautiful cars and make over 6 figures a year. We don't. I drive a Corolla.
I like it. Well done. There were quick 3 questions. All right. What was the book you mentioned there?
Shoe Dog by Phil Knight. I was talking about it earlier this morning. I believe that autobiographies are going to teach traders more about being a trader than anything else. Phil Knight is the man behind Nike. I like the book because most people, if they've owned a pair of shoes or trainers, I don't know what you guys call sneakers in Australia, but if you've owned a pair of sneakers, trainers, whatever you call them, you've probably owned a pair of Nike shoes or a pair of shoes that Nike owns. So everyone has that beautiful connection to the shoe brand.
Yeah.
Shoe Dog is an autobiography written by Phil Knight about his experience and about building Nike. And just like you were saying with trading, those types of stories talk about growth in a very slow manner, and then exponentially it kicks up. So Nike went public in 1973, 1974. When people came over, companies came over to interview him because they were Nike. They were on the feet of Olympians. They would come over to interview him, and his credit card would decline for McDonald's. At that time, a McDonald's dinner for 4 was $20. And so his credit card's declining. He's driving a jalopy in the front area. Foot Locker, actually, when they came to interview him, they said that we thought you were gods until we saw your cars. They weren't, right? Then all of a sudden, after all that work, 10 years working on Nike, they went public, $20 a share. And from all within moments, he went from being in debt, $30,000 back in the 70s, to being worth $12.5 million. In today's money, it would be worth something like $48 million in US dollars. And then from there, he went on to be a billionaire. And it's incredible to think about because we compare ourselves and we see all these people that are super young doing this and being amazing at trading. And then we realize the guys that are really doing it and doing it well, on average, they're 42. They have families and they've been doing this for 20 years. And so that's why I always suggest books like Shoe Dog, because that really humbles everybody. Phil Knight wasn't a millionaire when he was 25. He wasn't a millionaire when he was 35. He was 45, and he was still trying to figure out his life.
And that plays into your third answer there, the biggest myth about trading. You said we don't all drive supercars and make 6 figures of the year. Talk to me about that.
We don't. You know, last year I made a cool 5 figures. Congrats. Whoop-de-doo. You know,
Oh, that's
that's
good.
great. That's a great, yeah.
Yeah.
That's a great supplement to my income. Very, very, very proud of that. But you know, a few years prior, with the trajectory that I had with me trading and risking 5%, 7% on a trade, I had months where 50% in a month would mean 10 grand because I had 20 grand in an account. So you do the math, and that's what every trader does because we're traders. We look at the math, right? If I'm making 50% this month and I'm at 30 grand, I'll do it again next month. And that'll be 45,000. And then I do it again the month after. And you don't realize that that's not feasible. That's not real. And so I always love to throw that in there, sprinkle in a little bit of truth glitter and help people to realize that you don't have to be a superstar to make money on trading. You just want to be the guy that hits singles and doubles, the gal that hits singles and doubles, and that turns into singles and doubles and triples and thousands in the bank account. That's what you want.
Yeah, beautiful. I've got a final takeaway from you here, Aaron. What's the single most important piece of advice you'd give to someone starting in trading today?
This is another controversial thing. I believe that every trader should treat trading like athletes treat their jobs. So I believe that if you want to start trading, you need to trade like an athlete plays their sport. What does that mean? In one sentence, if you were going to go play football professionally here in the States or abroad, you would spend 90% of your time in practice, reviewing film, reviewing your stats, and 10% of your time in games. There would be an off season where you don't touch a ball and you would focus on your recovery. I think that's the same. It should be the same thing for traders. If you want to trade, take it professionally. Take it professionally. 90% of your time, be in the stats, have a nose in a book. That other 10%, be on the charts, get in, get out, do your best performance, record that performance, and review the film after the game. That's what I got.
Beautiful. Beautiful, Aaron. Where can people find more from you? If people have enjoyed this conversation, they want to get a bit more information about you or from you, where can people go?
Here on TradeDelicious, of course. We stream 4 times a week right now. It's probably going to be more than that. By the end of the year, we might be streaming 7 days a week. You guys just might see me all the time. My wife and I have already looked at a couple places in Melbourne where we might be flying out there, and then you'll just see Jordan and I together, arm in arm, arms locked, running around talking about how horrible gold is.
You'll teach me how to break dance.
That's not true at all. My wrists are horrible. Moving on. Please, if you want to, you can follow me on Twitter. I say a bunch of nonsensical stuff about Tesla and how Nvidia is going to fall off a cliff eventually. And a broken clock is wrong twice every day. So if you want to find me there or on the stream, always welcome. Always welcome to see people. And if anything, thank you for having me on the show, man. I really appreciate it.
Beautiful. Thank you for being a part of it. Everyone watching at home, make sure you've liked, comment, and subscribed. If there's a certain takeaway you got from this video, make sure you're commenting and letting us know. As always, I'm gonna take a page from Aaron's book in how he signs off here. Trade well and trade delicious. This is Traders of Money. We'll see you next week. Cheers.
We'll see you.